Good evening, friends. Deepak, am I audible?
Yes, you are audible. Please go ahead.
Yeah. Thank you. Good evening, friends. Today we want to share a great insight from market veteran Mr. Shailendra ji. He is the CIO and co-founder of Narnolia. Basically, we have two portfolios of Narnolia in our IIFL bouquet, and we would like to share the details, understanding about the composition of the portfolios, as well as the picks, why they have picked up this kind of a portfolio, and about the market as such. So before beginning, we have also Deepak Singh along with us. He is vice president at Narnolia and who manages the product side. Deepak, over to you.
Yes, Viral, thank you so much. And I would like to thank everyone attending this call and taking time off on this about the weekend evening. What I would like to do is I would like to first give a brief introduction about the Narnulia brand, and then I will also give a brief introduction of our speaker for the day, who is Mr. Shailendra Kumar. So Narnolia, we began our journey way back in 1997, and it was founded by two gentlemen, Mr. Krishnaji Narnolia and Mr. Shailendra Kumar, who will be your speaker for today. We are one of the oldest and the second largest, fastest growing RI of the country, running advisory funds since last 12 years. The team of analysts that we have under Shailendra sir is more than 30 people, and it's a co-founder led entity. Now, what is the significance of this quality and quantum of return that we have generated over past 12 years? Be it any phase, मतलब whether हम bull market की बात करें, bear market की बात करें, we have been able to consistently perform in this period. And why have we been able to do that is because of 3 points. We have been focused about absolute, relative, and consistent basis. On an absolute basis, Narnolia Multicap, which is also one of the funds that we are presenting to you, has managed to generate 20% CAGR return. मतलब 20% return उसने उसके शुरुआत से दिया है. Or index के compare से, if I compare it with benchmark, it has outperformed by 8 to 9% compared to the index. Why has that happened? Because we have a hawkish focus on the consistency aspect across all strategies. We have been recognized and awarded by as the most consistent fund manager of the country in 2018 and 2019 by Tefla. Very recently, there was a very big award ceremony which was judged by CRISIL for PMS Bazaar. There also we stood ranked 2, and we were given 4-star rating in the multi-cap category. So you are listening to one of the most awarded asset management entity, if I may put it that way. And I must also say that some of the most popular asset management names and the PMS name that you have heard, वो सारे compete कर रहे थे उस award में, जिसमें हमें second rank आई in the country. So during his presentation, Shailendra sir will also be taking you through some of the material that will also help you understand that how this robust return has been generated. We have very well developed over the years 112 sub processes that we follow. There are 4 stages of risk management that we follow, and we also have a hawkish focus on the risk management. And perhaps that's the reason why we are highly risk conscious, and hence we have great clients such as Indian Navy itself, who are one of our valued clients. This entire capability has not evolved overnight. In fact, it has evolved over the years by a lot of experience and understanding by the co-founder himself. And we take risks very, very seriously, and we try to manage risk very, very closely. All of these roles, if I say that the what you can expect from us is a sort of a glimpse of Rahul Dravid, as in slowly and gradually we believe in moving, but we believe in having very, very strong and solid foundations. What I'll always also do, apart from introducing the brand Narnolia, I will also quickly take a minute on Shailendra sir. Shailendra sir is our co-founder also. He is our CIO, Chief Investment Officer at Narnolia. He is known for his deep understanding and experience of over 2 decades in the space of fund management and investment advisory. His preferred style is growth in value, and he'll get into details of all of those things also. Shailendra sir also holds a postgraduate degree in management and systems from IIT Delhi. He has a very strong academic orientation. He has also authored a lot of financial publications, and he has done extensive research on corporate valuations and derivative pricing and all that. So with that, I would like to introduce Shailendra sir, and I'll hand over the virtual floor in the very capable hands of Shailendra sir. Shailendra sir, welcome to the session.
Thank you, Deepak. Thank you, Viral. So, folks, as the whole thing has been set right now for all of you, First of all, it's my privilege today to address this whole gathering of investors associated with IIFL. It's a privilege for me to address you all today. During the conversation, I'll take you through some of the market nuances which is happening right now and the way I am looking at the market. I mean, I'll share my feedback on the market. I hope that will be adding some value to your own decision making in equity. So that's the agenda. I'll also introduce you to the funds that Viral and Deepak spoke of, NS Multicap, NS 50/50. As in the last slide, Deepak was speaking about, we have made 8-9% kind of alpha over the last 12 years. It's not 1 year, 2 years, it's 12 years. Actually, the portfolio was running for 12 years. These are not backtested portfolio. Live, this portfolio have been running for last 12 years. On an average, we have made about 9% kind of alpha on an annualized basis every year, all through 12-year journey. What I'll do is that I'll just touch upon how the portfolio has done in the last 1-2 years, because that's more a focus to you. How the portfolio has done in the last 2-3 months when the market had seen some kind of a correction. So that's the agenda of my topic. Some market, whatever view I have for the market right now, I'll share with you, and I hope that will be helping you in taking decisions. So let's get going right now. These are the return of 2021 calendar year. So in the 2021, which asset class gave what kind of a return? Let's forget the chart. Look at the table here. In the last 4 calendar year, how the Nifty has behaved. And majority of you must be knowing this. I'm not adding any value by showing you this table. In 2018, Nifty was up by 3% in the calendar year from 1st January to December 31st. Nifty was up by 3%. 2019, Nifty gave 12%, 2020, 15%, and last year was 24%. Folks, data is not important. What I'm trying to share with you is, because of the high swing in the market last year, post the COVID, it appears the market has gone up a lot high. This 18,000 Nifty looks a lot high, right? Because we saw 9,000, 8,000 last year. So it looks very, very high. But that large swing of last year, masks the reality that Nifty basically as a calendar year has not given very high return. What the meaning of that is, that means Nifty is not overrated. 3%, 12%, 15%, 24% is not a very high number. And if you give 30%, 40% return for 2-3 years, you can think of that market is very overrated. And it's not good time to invest in the market. But the reality is, for our equity investing, the return had been very, very sober in the last 4 years. And that should give you conviction that market is not overrated. So a lot of people who are recommending to buy at current levels, some people are very skeptical. Market has gone up a lot high. Why somebody is advising me to buy equity right now at this high level? But these numbers would give you comfort that we are not overrated at a yearly return what Nifty has given. Now, in the last 2-3 months, a lot of negative news has come, right? What has happened is, like, the inflation is very, very high. Inflation across the globe, whether India, whether US, whether Europe, the inflation is very, very high. And I must admit, initially when the inflation started going up in the early of 2021 or the end of 2020, it appeared as if the inflation is transitory in nature, temporary in nature. It is mostly because of supply side constraints, because of COVID-related restriction. So the inflation will die down very soon. But now, after a year, what we are realizing is that inflation is very, very sticky right now. Why? Because inflation has not come because of supply constraint only, but because of huge demand revival. You will be surprised to know that the world economy today is bigger than what it was pre-COVID. World economy today is bigger than what it was pre-COVID. 2020, calendar year 2020, the world economy fell by about 5.5%, around 5%. So 100 rupee GDP of the world fell to 95, right? Oh, sorry, 3.5%, not 5%. It fell from 100 to 96.5, the world GDP. But this last calendar year, 2021, the growth is now 5.1%, 5.2%. That means that 96.5 is now above the 100. That means the world economy as an aggregate is higher today than where it was pre-COVID, right? And that is the key reason why inflation is happening. And then all kind of worry around inflation, that now interest rate will go up in US Fed. You must have listened to US Fed what the news is coming from US. Fed is starting to reduce the QE and rate range is there. Maybe second half of this calendar, 2022, there will be successive interest rate rise. Now, we all know from basic of finance that a stock price, whatever gain you get because of two sources. One is earning growth and second is discount rate or interest rate. Definitely at the end of 2021, the news is negative as far as the interest rate is concerned. How this will play out in the market? Let me share you a couple of thoughts on that and then we'll come to the portfolio part of it. This is Nifty ka chart. Ye Nifty ka chart hai between 2003 and 2008. And why I'm showing you this chart, I'm not a technical analyst, but why I'm showing you this chart, I'll come in a second. Between 2003 and 2008, Nifty had a roaring kind of a bull market. Nifty went up from 1000 level to 6000 level, almost 6x in 5 years. So Nifty ने 6 साल के अंदर में 6 years के अंदर में 5x का return दिया था. Now why I am showing you this? Because of these two charts. This is India's interest rate in terms of 10-year bond yield. ये India का 10-year bond yield है. Look at the period 2003 to 2008. Our interest rates were going up from 5.5%, it went to 8.5%. Forget India, look at the US government, US interest rate. There also the interest rate from 2003 to 2008 was rising only 3.5% to almost 5%. Add the two stories together. A roaring bull market happened in India between 2003 and 2008. During the same period, rates were rising, whether in India or in developed market like US. Now that should give you some comfort that this talk that the interest rate is rising is not necessarily negative for the equity performance. So that should keep you that should get some burden off your shoulder, right? But yes, something will change. And what will change because of rise in interest rate in US, I'll give you a surprisingly positive view on that. How this is helpful for Indian market. I'll just share one or two slides to conclude this thesis I'm giving you. That the stoppage of QE and rise in interest rate in US will be India positive. Let me share a couple of thoughts on that. This chart on your screen right now is showing the return by S&P 500. S&P 500, Standard & Poor 500 is the major index of USA. You all must be aware about it. This is the major index of USA. Between year 2011 and 2021, this index is up by 337%. So in the last 10 years, 2011, 2021, US main index, S&P 500 has given 337% return. 337% return has come in the last 10 years in US. Now, from where those returns came, what was the factor behind that kind of a robust return in the last 10 years in US? Just look at these four data. 70%, 71% gain came because PE expanded. So price earning expansion की वजह से 71% का gain हुआ. So out of 337%, 71% return came because multiple expanded. The price earning ratio expanded. 106% return came because earning went up. So between 2011 and 2021, the earning doubled in American stock market. So about 106% return came because of earning expansion. 24% came from dividend. Surprisingly, the large part of 337%, large part of this gain in S&P 500 came from share buyback. Almost 40% of the return that American stock market gave in last year came from buyback, 136% from share buyback. Now, why I'm reminding you of this? And you can easily understand why buyback will mean higher stock price. Because once a company goes for buyback, means number of share reduces, right? So if a company does a buyback, number of share will reduce. Correct? Simple thought. If the number of share will reduce, means earning per share will go up. So the market will adjust accordingly. Now, so 40% return came because company itself were buying their own shares from the market. That was the major driver for how US market had a huge run in the last 10 years. I'll just share a data with you. Even in the last calendar year, 2021, look at this column, 52-week average. Forget other data, just focus at 52-week average. So we say that because of QE, the central banker flooded the market with money. And that money somehow got parked into stock market. But what was the linkage? Who were buying those shares Look at hedge funds. They were net sellers, $374 million on an average per week. Means last 1 year, if you take average of every week, hedge fund were sellers, institutional, they again were sellers. Even the private client, retail client, HNI client, they were also sellers. So you had a very smart market last year in US. Almost S&P 500 went up by 24-25% last year in US. But none of the market participants, including hedge fund, mutual funds, HNI, retail, none of them were net buyer on a weekly average basis. So who ultimately were buying equity? Because of which market prices went up, it was only corporate. Look at the red marked row. Corporate were buying humongously, almost $1,500 million on an average per week. So when I was showing you this chart, you can understand ultimately the market went up because the corporation were large buyer of their own equity in the market. That was the key driver. Now, why I brought this topic in front of you today? As the rate of interest will go higher in US, naturally the tendency or the decision-making process, these corporate adopt to take decision whether to retain the earning or do the buyback will reverse. In a 0% kind of an interest rate environment, it was much more prudent for a corporation to go for buyback than to retain earning, right? So one unintended consequence of this noise around rising interest rate or tapering of QE, rate rising, will be that corporation will do less buyback in US. And that simply means the stock market performance of US due to this reduction in QE and interest rate rising will surely be negative, right? How India will be benefited? Because for us in the last 10 years, buyback was not a major driver. In Indian market, in Indian context, buyback was not a major driver for our stock performance. So what you see in a relative sense, Indian stock attractiveness vis-a-vis developed market stocks or US stocks will get positively impacted by this event of QE going out and interest rate rising. So that's what I'm trying to bind the whole thesis around it. I'll just share a chart again with you. Now, this chart is of last 20 years, 2000, 2021, 20-year chart. What this chart is all about, it's a ratio chart. It's a ratio chart. A ratio chart is when you divide one thing with the other thing. So like this is a Nifty / DJI. That means price of Nifty divided by price of Dow Jones index. And Dow Jones is a US index, we all know. So this chart is a ratio chart. In the ratio, the numerator is Nifty and the denominator is Dow Jones, the price of Dow Jones. Simple math, numerator, denominator. So this chart, when it is going up, tells you that the numerator is higher. That means between 2003 and 2010, when this chart is going up, that means Nifty is doing far better than Dow Jones. Very simple mathematics. So this was a 7-8 year period where Nifty did far better than how the US market performed. But thereafter, in the next 10 years, between 2010 and 2020, the shape of chart is opposite, right? Either it's falling or maybe consolidating. But look at this green arrow marked space here from 2020 second half onward. What you see, kind of a breakout, right? I'm not a technical analyst. I'm just giving you the statistical pattern, how things are playing out in the world market. What this tells you, we had a great time 8-9 years in 2003, 2010 era. Then for 10 years, in a relative sense, we were doing far bad or far inferior to how the American market was performing. I give you the fundamental logic. That performance came a lot because of huge amount of buyback which happened in American stock market. Now, because of rising interest rate and no more 0% kind of rate scenario, the velocity or the kind of buyback we saw in American market last 10 years doesn't look to be happening in the next 3-4 years. That simply means relative attractiveness of India vis-a-vis US because of this trigger in interest rate. And when I look at the price chart also in a ratio form, this chart also validates what thesis I am trying to get to you. So that's folks, market view. There will be negative news around this high rising interest rate, lot of stuff. Sometime US market will fall a lot. Recently, you have seen how Nasdaq has behaved. But what a thesis I'm trying to give to you is that is net. This event which is happening right now at the end of 2021 or early 2022, net in a structural sense, it is positive for Indian stock performance and not negative. Of course, during the month or week when the US will fall a lot, we will also fall accordingly, but we will fall less. And in the months when the market will be stabilizing or going up a little bit, we will go higher. This ratio chart indicates you the same phenomena. So that's one way of looking at it. Secondly, for us who are investing into Indian equity market, the reason why we are in a structural bull market after a long time are all in place, right? All the reasons, formalization, we are not going to less formalize in 2022 or 23. So that remains a huge amount of tailwind for equity performance. Profit margin expansion looks very set for 2022-23. Digital, which favors India humongously. Relatively, our interest rate will be lower. Relatively, I'm saying, not in absolute sense, will be lower than what it was, say, 4 or 5 years vis-a-vis China, Korea, US, or other nations. Retail flow, which is again a positive buy because these retails are buying into cash market. They are not dumping into derivatives. So it's not a leveraged retail play right now in India. It's a rock solid cash market investment, which again a very good tailwind for stock performance. And secondly, the FII allocation in India as a percentage of their AUM is very, very small, less than 1%. So whatever all the FPI, hedge funds, sovereign fund we talk about, their exposure to India as a proportion to their AUM is very, very small. And these factors are very structural. Next 2, 3, 4 years, we are going to see the benefit of these players. We already have saw last year how we behaved. The same performance we will be repeating. I don't have any doubt. I'll not go in detail of these parameters exactly to narrate because we have to constrain the time period. That's the thematic angle. What are the themes which is pushing the Indian market high? Purely in a bottom-up sense, our earnings are growing very, very fast. So in FY21, the Nifty earning was 503. And I'm very, very convinced by FY24, that is March 2024, the earning of Nifty itself will double. It will be 1018. What I'm saying, not Nifty, but Nifty earning per share will double in the next couple of years, right? So that's the kind of a huge earning growth we have. And if you look at the valuation band, look at the PE. PE is a very simple thing to understand. You all must be seeing the PE of Nifty and what. We have seen the Nifty trailing price earning ratio on trailing EPS always goes to 24. If you look at the last 6-7 year data, you will find that 24 PE on a trailing basis always goes through, right? So in 2024 March, if 1017 will be the earning per share of Nifty, multiply by 24 is the minimum target you have for the Nifty, right? So if you are investing today in 2022 January, and your target is say next 2 years, that is 2024 January or February. So 2 years, 2 months, multiply by 24, 2017 is the target, which gives you about 18% kind of a return in the next 2 calendar years. 2022 calendar year and 2023 calendar year should be giving us Indian equity investors around 18% CAGR based upon the theme which is playing out, which is ultimately is the reason why things are structurally large. And if you look at it in the pure simple earning per share PE envelope band, 18% looks very, very convincingly possible for us Indian equity investors. So that's on the market side of it, folks. Quickly on one aspect I'll add, hopefully it's valuable for you. In the past, we have done a research on corrections. We are always fearful of corrections, right? Abhi last 3 दिन से बाजार गिरा है. Some of us will get scared, right? It's very obvious, very natural. In the past, we have done a research that in every structural bull market, and we are right now in a structural bull market in India, in that structural bull market, what is the contour of correction that happens? उस bull market के अंदर में जो correction होते हैं, वो correction का स्वभाव क्या होता है, क्या nature होता है? And this is the summary table. The left hand side on the screen is summary table. In a 4 or 5 year bull market, like the one we are having in India right now, you will have about two correction of 6-7% duration. I mean, there are about 2 corrections where the market falls between 5 and 8%. So from the peak to turf, you fall by 6-7%, 8%, right? Those corrections last for about 22 trading sessions. Some correction happens for 12-13%, about 3 times in a bull market. So if 2020 to 2024 is a bull market, folks, be very, very sure that there will be 3 corrections like this, and maybe 1 or 2 corrections which will be larger in extent. In terms of number of days, for how long this correction will last, 22 days, 40 days, 117 days. Now keep this number in mind, 117 days. 117 trading days means about 6 months, 6 calendar months. 117 trading days is approximately 6 calendar months. What this research on correction tells me, that every 6 months in a bull market, you will have a new high. Let me summarize again. In a bull market, the kind of one we are witnessing for the last 1 year, and we are very, very confident of the next 3 years as well. In a market like that, whenever you fall, whenever you go in a correction, in a worst case scenario, in 6 calendar months or 117 trading session, you hit a new high. Now, we hit a high last year in October, 18th of October, right? On 18th of October 2021, Nifty made a high of 18,600 or thereabout. And since that 18th October 2021, we are falling. We are like lower from that level. Keep this 117 trading session or 6 calendar month in the mind. That simply means in a worst case scenario, in the month of April, we will be making a new high. So I'm giving you a very short-term market view. So you got a time for 2 months to make your levels, to make your correction levels, to have a decision on how to make your entry into the market. But be very, very sure, this is the worst case scenario. It will give you opportunity to enter into the market. Beyond that, again, it will be at a new high, and you will just simply miss the whole, the beautiful rally that this market is witnessing right now because of fundamental reason. I'm not talking about just the quantitative aspects here. So that's a summary of my market view, what is running in my mind right now. So what I was thinking yesterday evening, I thought just sharing with you how I am looking at the portfolio and how I am looking at the market at the moment. And I hope I added some value to you through this conversation. Now, folks, let me dabble for another 10-15 minutes about the product, the portfolio, which is there available on IIFL platform for you to buy into for this good amount of return which the market is throwing. You got buy a stock or a mutual fund or a PMS or an investment advisory portfolio. So at IIFL platform, we got 2 products right now, NS Multicap and NS FITI. So I'll just touch upon the nuances of these 2 portfolios. As I said, these portfolio are not back-tested quantitative portfolio. This portfolio has been running live for last many years. So Multicap had been running since April 09. So a very long, real live data which is there. During the last 12 years, we have seen a lot of bull market like 2009-11, 13-17, and now 2021. And we have seen a lot of bear market also, 2011, 2013, 2017, 2020. Across the market phases, whether the market was rallying or declining, our performance vis-a-vis benchmark had been very, very super. As in one slide, which Deepak showed you in the beginning of our discussion today, on an average, we have made 9% alpha, and we had been consistent in the 9%. It's not like in 1 year we gave 30% alpha, and in the next 3 years we were having negative alpha or lower than the benchmark performance. Almost on a continuous basis, we have been able to generate this 8, 9%, 10% kind of alpha on a real basis. And why this is important? Friends, a lot of time you see some portfolio or backtesting bada acha hota hai, 50% extra return, 30% extra return. But when you put money, your money is not for past, your money is for future. And then you realize कि यार मजा नहीं आ रहा है. NS portfolio, the portfolio we manage at our end, we have seen our alpha had been consistently over the various time period, month-wise, quarter-wise, year-wise, market phases-wise. Let's see how we behave between 18th of October and 20th of December. From 18th of October last year to 20th December, market fell from 18,600 level on an intraday basis to 16,400, 500 level, right? On a closing basis, Nifty 500 fell by 10%. So I'm just showing you these data to have this conviction that what return we are showing Even in a short-term period, medium-term period, these remain very, very consistent. So during the last decline, when market was falling, a lot of portfolio, the back-tested one, the quant portfolio, gave very bad return. This portfolio fell lower than the benchmark. Look at the NS50, NS multi-cap, almost 3% kind of alpha. So market fell by 10%. This portfolio fell by only 7%, right? Let me show the same data in a different fashion. So this is the NS multi-cap. We can divide the last year. We said 9% alpha, right, on an annualized basis. So, and it's not a 1 year fluke. This has been consistent all through last 12 years. Last calendar 2021 can be divided into two parts. The rally market, the market was going up between 1st January and 18th of October. And then after 18th October, when the market didn't go up or it fell, basically. Look at both the side of the market. When market rallied for about 10 months and went up by 38%, 37.9% to be precise, the NS multi-cap was up by 43.9%. So for the 10 months of last calendar, when the market was going up, NS multi-cap went up more than the benchmark by 6%. And in the remaining 3 months, when the market fell 5.6% on Nifty 500, the NS multi-cap fell only by 2.2%. So another 3.4% alpha. Aggregate for the year, we made 9.5%, approximately, more return than what the benchmark gave. Why I'm trying to show you this data? Sometimes what happens, because you have some momentum stock in the portfolio. For one particular year, you give a lot of higher return. Be very, very sure those portfolio will not remain consistent. So what will happen? Those performances are not replicable performance. So what I'm trying to show you through these smaller data or no more macroscopic data is that when a portfolio performs on various time window on a consistent basis, you can be very, very sure that what the performance of the portfolio had been in the past. And today, if you invest, your portfolio will have similar return in the future years, because ultimately future return matters to you, not the previous past data, right? So our 9% alpha in the past, how it came, how in the last year it came, so give you kind of a mental calculation or mental model where this NS multi-cap portfolio fits into your risk scheme of thing. These are the most consistent portfolio. When we got a lot of award from various, biggies of industry as a most consistent portfolio manager or ranked number 2 in award in India for PMS, those reward has come because not only because we have performed better, but it has come because we have performed very, very consistently all through our history of the product manufacturing. I'll just say one slide for this. What is the Raj? What is the reason why we have performed the way we have performed? And I'll quickly rush through this. Even if you look at one stock or a portfolio, any fundamental portfolio, I'm not talking about technical or other things. I'm talking about the fundamental portfolio. Every stock or every portfolio in a fundamental framework has got 3 distinct attributes. One is quality, one is growth, and one is valuation. So when you look at a stock or a portfolio, you can think of it whether this company on a fundamental region is quality company or not. On a fundamental basis in terms of earning or in terms of top line growth, whether it's growing or not. And thirdly, whether on a fundamental basis the valuation is attractive or not. So whenever you say I'm trying to understand the fundamental of a company, basically you are trying to understand either the quality of the company or the growth of the company or the valuation of the company. Same with a portfolio. Portfolio is nothing, folks, but bunch of stock collected together, right? So a portfolio has a 15, 20, 25 stocks. A portfolio can also be seen in this simple 3 distinct unique fundamental variable. Now, why I brought this to you in a notice? You must be knowing a lot of portfolio managers in India who are very quality focused. They always talk about quality, quality, quality. Right? And it's not bad. I'm not saying it's bad. But what happens? This guy in a bull market sometimes underperform very, very big. If you look at all those good quality portfolio in a bull market, they underperform. Now, there are some portfolio managers who are very growth hunger. They always want to identify the next growth company in India. Right? Now, these portfolio managers, when a market is rallying, will give you a huge amount of return. But when the market corrects, they fall a lot. So there is a trade-off, right? So quality people In a bull market will do very bad. In a bear market, they'll do very good. So when market will not be rising much, this portfolio will be showcase portfolio. Growth is opposite. When the market is in momentum, they'll show huge amount of return, much higher alpha. But when the market falls, they also give negative alpha big time. And there are some fund managers who are very valuation conscious, but majority of them falls in the valuation trap. I'll not go in technicality of valuation trap, but they get trapped. The Raj or the secret of NS portfolio of this consistency return is we have a very balanced view of these three unique characteristics. So instead of one-eyed, कि सिर्फ quality देखो portfolio बनाओ, we don't do that. Or just growth देखो and portfolio बनाओ, we don't do that. Or just look at valuation and make a portfolio, we don't do that. For us, the cue is, or for you also to understand, if you are buying security on your own basis, अगर आप खुद से शेयर खरीदते हैं, बेचते हैं, do it yourself वाले हैं, be very sure, identify a quality company. Don't buy anything. Buy only quality company, but buy only those quality company which is growing right now. Because if you just buy quality company, your performance at times will be very, very mediocre. Once you add the two variables together in a smart manner, you will have more consistent return. Means when the market will fall, the quality aspect will save you from negative alpha. At the same time, when the market will go high, the growth will ensure that you have a positive alpha. And this is what the beauty of NS series of portfolios are. These are bunch of stocks, 2025. And all these companies are high quality company. High quality means high ROE, high free cash flow, management pedigree bahut acha hai. Everything. I will not go in details. Today is the discussion about brief of market and port products. I'll stick to that. But all these 35 stocks or 2025 stocks we have in each of the portfolio. Once you look at the name and at the IIFL platform, when you go and you can look at what are the stocks you have to buy in that portfolio, you will not have any doubt on the quality aspect of those companies which we have in those portfolios. Also at the same time, once you look at those companies, they all are growing very, very well right now. When I say growing, it can be either top line growth, EBITDA growth, bottom line growth, right? And there is a valuation upside possible for those stocks. So it's a very balanced way of managing portfolio where you are not one-eyed. You only quality chalega and somebody only growth focus. No, it's a very balanced portfolio. And that is the reason why the performance I am showing you, the catchword for you to remember for NS portfolio is its consistency. It gives positive alpha, 8-9% on an annualized basis. But these alpha are not lumpy. कोई एक साल बहुत अच्छा हो जाएगा, फिर 2-3 साल खराब होगा. No, these are very consistent. And I just showed you through this one particular thing. I hope you must have caught it a little technical in nature, but I have tried to keep it very simple for explanation as such. The reason why NS portfolios are very, very consistent is because of this balanced view of all the three key attributes of a company fundamental. Other things remains very, very natural. There is no rocket science. We are a very bottom-up investor. Bottom-up investor means हम fundamentally dig deep करते हैं. So we make elaborate financial model of the company, business model of the company, understand the strategy of the management, what the financing strategy is, what the HR strategy is, what the marketing strategy, pricing strategy, promotion, place strategy are, in terms of how the macro headwinds, in terms of industry demand, supply is moving out. So it's a very detailed bottom-up analysis of those companies. But yeah, this is something which most of us who claim to be fundamental investor, we all do. Nothing a rocket science, but yeah, this is what differentiates us. As Deepak told you, we have today. I have to keep my talk in a limited hours. I'll not go in details, but we have a very evolved way of risk management. We are not the one कि हमें ये शेयर अच्छा लगता है, अब ये गिरे या बढ़े मैं रखा रहूंगा. We are not like that. When it comes to risk management, we are very, very agile, right? We are not arrogantly bullish about a company. That means कि ये तो अच्छा है ही, चाहे कुछ भी हो मैं लेके बैठा रहूंगा. We are not like that. We respect the market. So even with huge amount of research and very quality profiling, if we realize there's something wrong with our thesis, if the market prices are not validating what we are thinking, we have a very elaborate risk management method of exiting from the company, which gives us extra edge when it comes to consistency of return with Narnolia product or NS multi-cap, NS 50/50 shows you. Now, in the end, I'll share one particular statistics with you. What are the stocks in the portfolio? You can simply at IIFL platform, you can go and check those stocks. I'll give you the broad contour of how the things are. So the multi-cap portfolio, I'll just take the multi-cap portfolio. The growth parameter for multi-cap is 23.9%. Let me explain what 23.9% is. That means the 20 company we have in the multi-cap portfolio, there are 20 companies. In the thematic, which is 50/50, we have 16 companies. So in the multi-cap portfolio, there are 20 stocks right now. In the 50/50, there are 16 stocks at the moment. For all the 20 stocks, if you look at the weighted average of the growth, and as I said, this is a business growth. Some company top line, some EBITDA, some PAT growth. The weighted average CAGR growth of these 20 companies, 23.9%. Means from FY21, the prior year, to FY24, these 20 company, the growth is 23.9% compounded over the next 3 years, 21 to 24. Very high growth rate, right? You think of stocks, how fast their earning is growing. Not 24%. Nifty earning is growing a little smartly. Majority companies are growing at what? 18%, 15%, 20%. But this portfolio as an aggregate, the growth quotient of the portfolio is 24% compounded from FY21 to 24. Very high growth, right? You must be agreeing on that. The quality aspect, ROE, 18.4%. That means for these 20 companies, if you take the average ROE, weighted average ROE to be precise, this is 19%, close to 18.4%. That means what you are buying, when you are buying NS Multicap, you are buying a bunch of stocks, 20 stocks to be precise in NS Multicap, where the average CAGR in earning of those company are 24%, and those company ROE is 18.5%. So when I showed you the chart, folks, we buy only high quality company and high growth company. So we combine the two together. Look at these statistics and you yourself will understand when I said what is the Raj and secret behind our consistency, the kind of consistent return we have generated all through. And last data which I would like to say, put your focus is 37.4% is the valuation upside. Now, what is 37.4%? Based upon 2024 March earning, based upon our estimate of where the earning of these 20 company would be, we are calculating that the stocks average upside, so weighted average upside of all the 20 stocks is 38% in the next 2 years. 2024 March is, folks, 2 year, 2 month away, right? So we can say 2 years. तो यानी आने वाले 2 साल में ये portfolio NS Multicap should give us 38% kind of a return. So 18-19% kind of a return on a compound basis in the next 2 years. See, whatever conviction is with me and my team managing the fund and the stocks, this is that number. And this is not the number assuming market will become highly, bubble zone kind of, in a very reasonable way. So if something has to be traded at say like 10 to 20, we have set the target at 80 level only. So we are not capturing the full upside. When I'm saying this portfolio will give 38% return in the next 2 years and 2 months, I am not getting this data using a bubble valuation. I'm using the normal reasonable valuation on which the stock has traded in the past. And I'm taking a haircut also there. So we have come to this number in a conservative fashion. If something else happen, our upside can be even higher. In case of 50/50, these are the numbers to be shared with you. So folks, this is what the product is. I wanted to tell you 2 things to remember as a thing. These are live portfolio that we have run for last 12 years. These are not back tested data I'm showing you. On a consistent basis, this portfolio has given 9% more return on an annual basis. So if the average of Nifty is 15%, this has given you what? 24% return on an annualized basis for last 10, 12 years. That had been the performance. I shared with you some data of last 1 year itself, breaking the data into 2-3 parts, just to make sure that the same thing is getting repeated in the future or not, right? So consistently higher alpha, 9% more return than the benchmark on a consistent basis is what the NS Multicap is. Reason why we have done is not because of we do bottom-up investing. A lot of fund managers there in the market who do thorough fundamental research, but where we differentiate are 2 pivot. First, we are not one-eyed. सिर्फ quality देखना है या सिर्फ growth देखना है. We balance things very, very optimally, and that balance ensures us consistent return. And second leg of differentiation is we are very, very risk focused. We manage our risk in a much agile manner. And these two combines ensures the consistent kind of return that we have generated in the past. So with that, thank you very much.
Thank you, sir, for your wonderful insight. And it was nice to take a detailed one also. Friends, in case anybody has any questions, please feel free to ask. You can write down your questions in the chat box. We'll take the questions one by one. I request, if anybody has any questions in their mind related to the portfolio, related to market, please feel free to ask. You can write down your questions on your chat box. We'll take the questions one by one. I would also like to add, please don't ask any stock specific questions because it would lead to a wrong directions. So we have started receiving messages. So we have first question from Prasad. Long-term India growth story is intact. India achieves if India achieves 5 trillion GDP, as commented by many good people here, what do you think, what will be the Nifty target for next 5 years?
See, these big numbers I generally want to avoid, Viral. The reason is like you get hooked to big number. Let me give you simple arithmetic. Say India grows by whatever X amount, right? As I showed you through my presentation also, almost 18% kind of a CAGR looks very set for the next 3 years. For the next 3 years, I'm very confident on 18% CAGR. Right? So as I showed you, 1017 will be the earning of Nifty in FY24. So forget 5 years, just look at 3 years. People avoid short-term prediction. I don't care about. If I have a conviction, I have to be, getting my mind through to my investor, right?
Right.
2024 earnings 1017 or 1018 will be the earning per share of Nifty. Multiply by 24, right? That becomes the target of March 2024. Now we are trading today at 17,600. Do the math. There is 18.5% CAGR available for you to make through in the next 2.5 years. So that's what you can extrapolate that number, and that Nifty will become 30,000, 35,000. That will be a headline number. Unnecessarily biasing our brain. Go with the 18% kind of a CAGR. That will be more financially healthy for us.
Right. So 18% also will take us to around 24,200 odd.
Correct.
There's a question in the Q&A also. Viral, if you wish, I can also go ahead and assist you for.
Yeah, please.
Yeah. So so on the Q&A section, we have a very interesting question that says, who has been listening very carefully. It's an anonymous attendee whose question is, you said that USA growth was stimulated by buybacks, but what stimulated Indian economic growth?
Yeah, riding, we have to be very proud that we are in a very great budging economy at the moment. I'll just give you one or two examples quickly. Look at the digital economy. We are king in digital, right? Look at India. We produce 16.5 lakh graduate engineer every year. India produces 16.5 lakh graduate engineers. If you take the same number of US, China, Russia, and all the major nations, the number is less than India's number. And in the digital, what you require is a very engineering focused workforce. Now, gone are the time when you had GDP breakup as agriculture, industry, and services. I am pretty sure after a couple of years, digital will be large part of GDP across the nation on earth. We are digitalizing very fast. We are talking through Zoom right now, right? We are using a digital means. Our economic activity are going a lot digital. And when it comes to digital, our dominance are very strong. Gone are the time where we were like cyber coolies, 2000 and 2095, 2000. It was a body shopping, basically IT shop in India. Then we became, some kind of an application developer. But today, majority of the large digital product company like Google, they can't afford to have an R&D center in India, right? So that's the kind of predominance, correct? And that digital will make India a humongously bigger nation vis-a-vis other nations. That's my huge conviction. And second part, our economy was very fragmented a couple of years back. For good reason or the bad, we are formalizing very fast. I'll give you simple data. The larger formal company in India constitute 40% of India GDP. And you may say, "Arey, बहुत ज़्यादा है 40%." But look at the US. The large formal company constitutes 70% of their GDP. Now we are only catching up. So these two legs, if you consider in a very serious manner, the next 7-10 years, I just talking about 2-3 years because I don't want to give you a waiting period of 10 years for the return from my portfolio. I want to give you a smaller time horizon. But if you are an India equity investor, next 7-10 years, because of twin engine of formalization and digitalization, the headroom for us to grow is very, very high. And that is what is driving us, not buyback for sure.
Thank you, sir. We have.
So there's a question by Mr. Natwarlal. Should I, Viral, go ahead and
Yeah,
read it?
please.
Yeah. So Mr. Natwarlal says that please share your best ideas which helped to outperform your portfolios, and what made you believe that stocks will perform, or thought process in picking such ideas.
So excellent question, I must say. It's a very long answer I have to give. I'll try to summarize quickly so that we can take more questions. As I said, we try to look at the company which is very high quality company. High quality company means promoter pedigree, you are comfortable with. Their strategy, how they are strategizing their business, you are comfortable with. Balance sheet looks very, very solid to you, right? Second angle is they are growing very, very fast. So a lot of stocks, folks. We had a Tata Elxsi, almost like 6x in our portfolio. We bought Dixon almost 7x, 8x in our portfolio. We had India Mart almost 4-5x in our portfolio. So a lot of company, I'll not go in a company by company analysis. That will make the thing very, very longer. Every company where the unit economics is very good, the quality is of the business is not in doubt, quality of management is not in doubt, and you see there is a good growth for the business in the foreseeable 2-3 years, not 10 years, 20 years, foreseeable 2-3 years. So when the combination of quality growth comes and on a valuation envelope, you have an upside, you get a lot of good company for your portfolio.
Thank you, sir. Many people have started asking for recording sessions. We will share the entire recording sessions very soon. It would be also available on the YouTube channel. We'll share both the links also separately. There is a question. I hope this question has been taken of Mr. Datta's question has been taken. Friends, in case any questions, please write down. So we have a question, is this offering a closed PMS or open? This is purely an RIA portfolio. So technically it will be a DIY concept where Shailendraji will be managing the portfolio, where execution will be lying on the customer's end. In case you have any further query pertaining to how to purchase this portfolio, please feel free to reach to your relationship managers. We will get in touch with you, or they shall get in touch with you and explain you how to purchase the same. It is very simple. It is available through our IIFL app also. We have a question from Nitish Soni. How correction could we observe that? How deep is it like current scenario? Probably he's trying to say what is the correction expected in current scenario.
So we are correcting since 18th of October, right? So I see there are two issues to be always kept in mind regarding correction. One, how long the correction will last. I mean, when the next high will happen. That's very, very important. So you can do a STP or like 3-4 month window of SIP and stuff like that. When it comes to extent of correction, I gave you certain data. Some corrections are very small in nature, 7-8%. Some corrections are 10-12%. Few correction goes to 20% also. Now, at any particular correction leg, whether the 20% correction will happen right now or it will happen after a year, no one knows for sure, because that depends upon the short-term things or sentiment impacting issues, right? So it is not a structure. The extent of correction, for sure, you will know only after the event is past. You will not be knowing in a hindsight. You will not know that particular thing. My own guess is 16% kind of a correction, and about till February or something, and we are through, and then the March, April will be getting the market back to its new high. But yeah, be very, very sure. This short-term thing, you have to consult your RM to be very, very sure of. I'm giving you a broader contour of normally in a bull market, what the shape and size of correction happens.
Thank you, sir. We have a question. If there are several hikes in this year, which is expected, do you think the market can enter into a bear market?
No, not a bear market. See, bear market means what? You don't make money for a year. I mean, bear market is something where you don't make money. See, if today something is 100, tomorrow it goes to 80, but day after it is 101. Where the bear market was, right? You don't see every day stock price. I mean, I'm not on trading side of the business. The idea is if you buy today and if after a year also you have not made money, means you had got somehow faso in a bear market, right? That scenario for 2022, I am not. I'm pretty sure will not happen.
Sir, we have a question. How frequent does we do the stock performance review?
So Viral, review is on a very ongoing basis. All the portfolio, we have a very large team and very process-driven orientation, right? So every stock in terms of their price performance as well as in terms of fundamental performance, what the business outlook is, how the margin is playing out, how the asset turnover is playing out, what the business strategy management is changing. We review on a regular basis, a very rigorous process at our end. But yeah, do we trade frequently? No. Last trade in the portfolio was in the month of September, I think, beginning. And since then, for the last 3 months, we have not traded. But yeah, maybe tomorrow we will trade somewhere. So it's not that we trade very frequently, right? But on an average, 30-35% kind of a churn on a year always happens.
Okay. So technically, if you say 35% churn, it is still very low compared to the market industry.
Yeah. It's not a quantitative portfolio. Yeah. We have a deep bottom of fundamental.
Right, sir. So I'll just ask all our audience to just one more understanding is once you are able to purchase, once you have purchased the portfolio of Narnolia, then maximum every quarter or twice a quarter, maybe on a higher side, there could be the recommendations from Shailendra ji that couple of stocks to be exited, couple of new to be taken, and it is not a frequency or it is not a daily or weekly frequency to that extent. And whenever there is a change, customers will get updates through either email, notifications, and everything so that they can execute the trade at a single click of a button. So again, that single click of a button includes everything, purchase as well as sale. So it will happen automatically. Your sales will be done simultaneously, your purchase will be done, and again your rebalancing will be done in your own IIFL account, and all the stocks will be in your IIFL Demat account only. So I am just trying to repeat because we have couple of there could be few new customers just for their understanding. So we have a question again from Mr. Sagar. Do you think that the current inflation is chronic and may go out of control of the central bank soon?
Yeah, central banker to ignore inflation anymore. I mean, they were ignoring last 1 year. RBI also remained very neutral to the whole thing. But I think next year interest rate is set to rise. US is, and Europe it surely has to go rise. In India, the pace will be slower. To be surprised, our rate of interest. So I don't expect more than 75 basis points to 3 rise and more than that. I'm not assuming right now. So our 10-year from 6.5%, which is trading right now, can go to 7.25 at the max. That's what my conviction is. But in relation to that, the rate of rise in the interest rate in US will be higher. So that's good for India in a relative sense because everything is relative in investing across the globe.
We have a question out of the syllabus. What are the opportunities in currency segment in this scenario? How can you avail this? So this is, I don't think so, sir, we have a currency piece in our portfolio as such.
We don't play any currency, but yeah, of course, as a market analyst, I have to keep looking at currency. A lot of my portfolio company are exposed to a currency, right? So a lot of IT name players. See, my own sense is we will be relatively neutral to, I mean, we will not have a larger depreciation unlike past. So last 10 years, rupee had depreciated big time. My own sense is next 5 years, rupee, even if it depreciates, the rate of depreciation will be much shallower than in the past. That's my view on currency.
Okay. Mr. Natwarlal, as we have discussed earlier, that we would not like to take stock-specific questions. So we had actually asked a question about conviction ideas as on today, like Tata Elxsi and Dixon. So technically, all questions has been answered on the Q&A piece. Let's take on few questions more on the chat box. FIRs are selling on a selling mode. State elections in the February month. Can we expect a popularistic budget or any PLI schemes expectation?
Yeah, Vidal, see, if I look at the budget, the way I am thinking budget right now, this budget will be a kind of a populist budget without any doubt. I'm not saying because of election region. See, whatever bigger reform had to happen has already happened to my mind. PLI is an old subject. Only thing is like implementation now. PLI budget is there, all the numbers are there, every sector number are there. And this year we will see implementation on that. Right now, the problem in India is the top corporations are doing phenomenally well. Who is struggling? The bottom pyramid of the economy is struggling. So people who are working with banks, IT, they are doing phenomenally well. But somebody working with SME, MSME are struggling. So the lower strata of India is struggling. So naturally, them something has to be done through budget, which makes this unevenness, which makes this unevenness lesser and lesser. So I expect this budget to be more focusing on SME, MSME, individuals in social accounts and stuff like that. So it will be a populist budget, but saying populist doesn't mean wrong. It's a requirement right now. Purely in terms of our economics theory, it is required right now. But yes, some thrust on investment has to happen because private capex still has not gone high in India. So the two paddle has to be there. One paddle on government capex should be remaining very, very high. And second has to go on social infrastructure and social issues of India. So budget in that sense, don't expect a very business friendly and booming. We already are business friendly. Things are happening in India. We don't require anything more as such.
Agreed, sir. Agreed, sir. Can we say in a nutshell that the disinvestment money what they are planning to will have a major control or major infrastructure spend in next 2 years will help us to scale up the market such?
Right. See, even infrastructure, the infrastructure pipeline, the 100 lakh, 110 lakh crore of kind of pipeline means 21 lakh crore per annum. So we are expected to do 21 lakh kind of crore every year for the next 5 years. This year, I think we are close to 16.5 lakh. So the problem here is only of implementation. The intent, the policy is already on there, right?
Right.
Say something will get delayed to the next financial year. Maybe LIC IPO will come, something more will not happen. But I think the high amount of tax buoyancy we have, the great tax collection which is happening in India right now, because of formalization. Formalization means formal company are very capital intensive, they pay better, higher taxes, but they are bad in terms of they don't have human resources to the level SME or MSME does. That's the anomaly. So this tax buoyancy which is happening will take care of all the issues like, infrastructure pipeline. Only execution is needed in that sense.
Okay, sir. Do you see any particular sector to outperform in the current bull?
Oh yeah, that's a great question. Those sector of our economy which will be doing phenomenally better even in the foreseeable 3-4 years are like IT company. Digital space will keep booming. Lot of new age businesses has got listed lastly in the last 2-3 years. Dixon and India Mart and all are new age businesses, right? They will have a phenomenal kind of a growth. Only risk is what many of these companies are trading at a very, very high valuation, right? So as a business performance, the IT and digital and new age businesses are very good space for next 2-3 years. So whenever some correction happens on account of valuation multiple, IT per se and all the new age digital businesses are good space to put your money to work. In comparison to higher valuation here, the other theme has lower valuation. One is formalization. Lot of company, maybe in modern trades, in other things, who are formalizing the Indian economy very, very fast. In that sense, couple of FMCG name also, right? There the valuations are not that high. And third theme, just to add digital new age businesses, formalization. And I think second half of next calendar year, credit recovery will happen. And banks are not trading very costly in relation to the market right now. So as a hierarchy in terms of, I'll say digital, new age businesses, formalization theme company, a lot of companies are there in that space, and then the credit. So that's kind of picking order, I would say.
So we had a similar question, which you have already explained. Like we had a question on how you can take quality and growth into account, but what about valuations? So you have already discussed and explained.
Yeah, it's a balance. In our case, it's a balance of all three. I will explain.
Yes. So what effect do you think FI is selling will have on Indian market once it starts after the bond yield increases?
See, FI has not been a great buyer last year. This is not that 2021 Nifty had a rally of 24% because FI buying was there. It was hardly any, right? Very small, in couple of lumpiness they came. So I think we are in a zone right now where FI buying or selling will make dollar rupee parity a little bit volatile. But in terms of market performance, they will not have a very strong bearing on how the market will perform because the retail money which is coming to the market, and I'm pretty sure next year also will be an equally great year in that sense, is enough. See, look at this way. SIP money almost stably 10,000, 8, 9,000, 10,000 crore, right? That means in a year, 1,20,000 crore. 9,000 crore per month means that kind of a number. Good number is coming through NPS and insurance. Good amount of is coming through the Provident Fund, NPS and insurance number. Added together, something like a 2 lakh crore ka buying हर साल India में होना ही होना है. Against that, FI sells how much? 50,000 crore ka, right? 75,000 crore ka. So net the situation in India is today is that we have a net surplus buying only to happen in the next calendar year. So even if FI is a variable item, net will not be a negative take on Indian equity for the next 1-2 years.
Okay. We have couple of questions pertaining to the sectors. We require update on infra sector as well as energy sector, renewable energy sector specifically.
Renewable energy. So there are not too many companies in India, in a renewable space. So I'll not be developing. There are not too many buying opportunity. I mean, couple of names in the large space like Reliance is entering or Adani has a big presence. A lot of people are announcing, but as a proportion to their overall business, renewable is very, very small. So either you have a couple of large company where the revenue for renewable is very small, or you have a very small micro cap kind of company where the business is renewable energy. So I don't think in terms of your portfolio weightages, there are too many bigger opportunity for wealth creation in renewable. And although this stock had got fancy in the last 6 months, has run up also a lot. So I don't think this area will have bigger wealth creation to happen going forward. So I'm not very big in that camp of renewable energy space. When it comes to infra, for sure, infra will be one thrust area. You can position your portfolio for either good quality infra name, right? Or you can buy through some cement company maybe, because right now cement is the second highest consumable for an infra company per se. So those are the ideas, and cement valuation is not that very high. Plus there is a talk sometimes GST might come down on cement, maybe going forward sometime. So that will be another trigger. So that's the infra playing. Either pure EPC company you buy, or maybe some cement exposure to your portfolio.
Okay, sir. Now we have a question pertaining to our portfolio per se. What is the minimum investment required and what are the charges?
So I can go ahead and take that one. Hello. Yeah. So there are two portfolios that are available from Narnolia on the platform. One is like sir discussed multi-cap portfolio, that there the minimum ticket size is 3 lakh rupees. The second portfolio is 5T x 5T. There the minimum ticket size is 5 lakh rupees. How the charges work is basically under the SEBI guidelines, RI is supposed to charge to a maximum 2.5%. So how it happens in case of the investment through IIFL through small cases in Narnolia is your portfolio's values 2.5% is divided by 12, and on a monthly basis that 1/12 goes away. That's how the pricing happens. So on a monthly basis the charges come down very, very sharply, and 2.5% under the guidance of SEBI. That's how the charges work. Yeah.
Okay. So I'll just repeat what Mr. Deepak has already said. We have two portfolios. One is of 3 lakhs and one is of 5 lakhs. And charges are 2.5% on annualized basis, deductible on the monthly basis.
Perfect.
How do you see IPO companies' performance coming up for financial year 2022? Will it be same as per 2021 or lesser?
I feel very happy. There are some really good new business models are coming on the market, right? Map My India. I'm not recommending all these names. So when I'm taking these names, just be very sure it's not a recommendation. Look at Map My India, look at Rate Gain, look at a lot of Nika and other companies. They have come up with an excellent digital business model. And to my mind, their unit economics is very, very strong, right? So that's a good space. And I hope more IPO comes this year. I'm not a votary of, IPO not coming. I want more IPO to come. so that Indian investors are exposed to more different kind of business model. And see, these companies are growing at 30%, 40%. Traditional businesses are growing at 14, 15%. So these are very high quality unit economics business and have a huge amount of growth ahead of them. So these are good company to come. Yeah, of course, nowadays everyone is making the valuation of this company very, very high, very, very fast. So you have to be very, very cautious in that sense. Don't buy these company with expectation of 1 month, 3 months kind of a return, or maybe patiently wait. These companies will also have some correction someday, maybe this month, next month, or sometime. Use those corrections to buy the high quality new age businesses. These IPO and the forthcoming by IPO as well.
Okay. So we have done almost all the questions we have received today. So thank you, sir. Extremely thank you for your time and patience listening to all the questions. Thanks, Deepak, for your time. So would like to conclude?
So Viral, we would like to thank IIFL for providing this platform to us, and we hope that this partnership with IIFL and Narnolia goes a long way, and all your investors benefit from our competence that we have developed over 25 years. And I'll like to thank for attending this session today.
Thanks everyone.
Thank you.
Thanks.
Thank you on behalf of all the customers and all the employees who have joined today. Thank you all. Yeah.
Thanks.
Happy weekend.